Ready to dig into something that's quietly reshaping the world as we know it.
I am.
We're talking about the Wall Street consensus.
Yes.
And to help us unpack it all, we're diving into the work of Daniela Gabor.
Oh, yeah.
She's like a leading voice on this new development paradigm.
Definitely a good place to start to understand all this.
Trying to get a grip on how this is changing the whole game for
Mhm.
international development.
It really is a fascinating shift, you know?
Yeah.
We're moving away from these like traditional models of aid, and it's becoming all about pulling in
Yeah.
trillions
Of
in private investment.
Okay, now you've got my attention. Trillions.
Yeah.
All right, but before we go full speed ahead here,
Okay.
let's rewind for just a sec. Remember the Washington consensus?
Oh, yeah.
Free markets.
Real-
Privatization. It was supposed to be like the magic formula
Right.
for global growth.
Yeah, and, it had its shortcomings, let's say.
Like it didn't quite work out as planned.
Not always, no.
So what went wrong?
Well, one of the big things is that the Washington consensus kind of overlooked all these
Okay.
unique challenges that each country has, like a one-size-fits-all approach.
Yeah, it's like trying to tailor a suit
Exactly.
from a single pattern. It might work for some, but
Right.
for others, it's a disaster waiting to happen.
Yeah, and that's basically why it fell short
Yeah.
for a lot of developing countries.
It's like they were promised this amazing outfit, and then they got stuck with something that didn't fit at all.
Exactly. And, now we're seeing this new approach. Gabor actually calls it development as de-risking.
De-risking. Okay. What's that all about?
So it's basically about making developing countries' projects so enticing
Okay.
to global investors that they can't resist. They have to open their wallets.
So less about direct aid and more about luring in
Exactly.
private capital.
Yeah.
Okay, I'm starting to see where Wall Street enters the picture.
Mm-hmm.
But how does this whole de-risking thing actually work in practice?
Well, think of it like this.
Yeah.
Governments, they use these policy tools
Okay.
and financial incentives to make these development projects seem less risky.
Okay, so less about giving out party favors,
Right.
more like, ironclad guarantees to
Exactly.
make those investors feel secure.
Yeah. It's all about minimizing that risk.
Can you give me an example? How would this play out in the real world?
Okay, let's say a country wants to, build a brand new power plant, right?
Okay.
Under this Wall Street consensus model,
Yeah.
the government might actually guarantee to buy a certain amount of electricity
Wow.
at a fixed price.
Okay.
And this happens regardless of the actual demand.
So the government's like the safety net, making sure investors get a good return.
Exactly.
But is this really that different from how development projects were funded in the past?
Well, there are some key differences.
Okay.
In the past, a lot of developing countries, they followed this developmental state model.
Okay.
Think mid-20th century.
Okay.
The focus was all about nurturing their own domestic industries.
Right. Building up from within.
Exactly. Promoting self-sufficiency.
Mm-hmm.
Governments took charge, shaped their own economic destinies.
Not calling the shots.
Yeah.
Whereas this Wall Street consensus, it's almost like saying, let's bring in the big guns, the global investors,
Right.
even if it means giving up some control.
You've hit on a key point there.
Yeah.
And to really grasp how this new model works,
Yeah.
we have to dig into one of its most important tools, the cascade approach.
The cascade approach, it sounds almost peaceful,
Yeah.
like a waterfall, gently shaping the landscape.
Right.
But something tells me there's more to it than meets the eye.
Yeah, you're right. Not quite as serene as it sounds.
Okay.
So imagine, you're trying to, let's say, fund a community garden.
Okay.
The cascade approach, the first question it asks is, can some company, some private company, make a profit from this?
Okay, so it's not really about whether the garden is good for the community.
Right. It's all about
It's about the profit.
that profit potential. Is this a moneymaker? That's the key question.
Okay, so social good takes a backseat to the profit motive.
Yeah, that's the kind of the core of it.
So how does this actually work? Paint me a picture.
Okay, so let's stick with your community garden, right?
Okay.
So the cascade approach would say, all right, step one, let's see if any companies out there
Yeah.
want to invest in this garden
Okay.
with the goal of making money.
Right.
Maybe they could sell produce.
Right.
Maybe they offer gardening workshops or something.
Right. Find some angle
Exactly.
to turn a profit.
And if no company's biting, then what?
Yeah, what happens then?
Then the government comes in,
Okay.
but not with direct funding.
Hmm.
Instead,
Yeah.
they start offering all these incentives, to try to sweeten the deal.
Okay, so they're like the financial matchmaker,
Yeah.
using taxpayer money to like lure in private investment.
Yeah, and even then, even after all that,
Yeah.
if nobody from the private sector wants to touch it,
Yeah.
then and only then
Yeah.
might the government think about funding it publicly.
So it's like the last resort
Pretty much.
after they've exhausted all other options.
Yeah, it's designed to keep governments,
Yeah.
out of the driver's seat as much as possible.
Yeah.
And to prioritize that private profit.
Yeah, it sounds like this system could end up,
Yeah.
neglecting projects that have huge social benefits, right?
Absolutely. That's the big critique, right?
Yeah.
By putting profit first, it might miss those projects that are really good for long-term sustainability.
Like what? Give me an example.
Think about public transportation
Yeah.
or environmental stuff, conservation,
Yeah, crucial stuff.
even basic research, right?
Yeah.
That might not, scream investment opportunity.
Right, it's not always sexy,
Right.
but
But it's crucial.
we need it.
Exactly.
Because we're putting a price tag on everything. Like, can you really put a price on clean air and water?
And that's where those commandments you were talking about earlier, they really come in,
Okay.
these underlying principles of the Wall Street consensus
Okay.
that shape everything. How governments approach, their fiscal policy, regulations, all designed to attract those private dollars.
Commandments, you say. Okay, I'm ready. Let's hear the sacred tenets of the Wall Street consensus. How are these rules, like rewriting the playbook for development?
All right, let's get into it.
Commandments. It's like we're like uncovering this sacred text for the global financial system here.
Right.
What's the first rule etched onto these stone tablets?
All right, so let's kick things off with fiscal discipline.
Okay.
Sounds pretty straightforward, right?
Yeah, I mean, nobody wants a government drowning in debt.
Exactly.
Keeping spending under control. That's
a good thing.
usually a good thing. Yeah, both at home and on like a national scale.
Right, exactly.
But how does this all tie into the Wall Street consensus?
So the Wall Street consensus, it really pushes for things like those public-private partnerships.
The PPPs.
Yeah, exactly. And, these partnerships, they sound really appealing
They do, yeah.
up front. But they often come with these hidden costs for governments. It's almost like, think of it like a buy now, pay later scheme.
Oh.
It might look okay on the balance sheet right now,
Yeah.
but all those future payments,
Yeah.
they can really pile up.
So governments might be tempted to kind of rack up all this hidden debt
Yeah,
just to chase after this private investment, and that sounds risky.
exactly. And to make matters even worse,
Okay.
those de-risking measures we talked about earlier,
Yeah.
the guarantees, the
Yeah.
subsidies,
Right.
all of that just further obscures the real cost of these projects.
It's like they're dressing up the debt in a fancy outfit to make it look better.
Exactly. Remember that cautionary tale, the Zero power plant in Nigeria?
Oh, how could I forget? That was a wild one. It seemed like a textbook example of how this de-risking stuff,
Right.
meant to help investors can totally backfire, and then the government's left holding the bag.
Exactly, saddled with all this debt.
Yeah, it's a reminder that there's, no such thing as a free lunch, right?
Exactly. There's always a cost.
Even in the world of development finance.
Always. Which is why we need more transparency.
Yeah.
More accountability with these projects. We got to ask the tough questions. Who's really winning here and who's shouldering the risk?
Couldn't agree more. Transparency is key, especially when you're talking about public funds.
Absolutely.
Okay, let's shift gears to another one of these commandments here. ESG ratings. Now, I've been hearing a lot about this ESG stuff lately,
Right.
but how does it all fit into this Wall Street consensus puzzle?
So ESG ratings, they stand for environmental, social, and governance, right?
Okay.
And they're becoming a big deal in the investment world.
Okay.
Investors use them to size up how sustainable a company is, or even a country.
Okay, so it's like a report card for how responsible they are.
Exactly. Like a sustainability report card. So good score,
Yeah.
right?
Yeah.
Makes you more attractive to investors, the ones who care about the environment, social impact, all of that.
Just like a win-win, right? Investors get to feel good about where their money's going.
Right.
And then developing countries get access to, to much needed capital.
On the surface, it seems like it.
Yeah.
But like always, there's a flip side.
Okay, there's got to be a catch.
There's always a catch.
Yeah.
Right.
What is it?
One of the biggest concerns is who's actually coming up with these ratings.
Okay, yeah.
Often it's private companies,
Yeah.
and they all have their own methods, their own biases.
So there's not really a universal standard.
Exactly.
Mm.
Which opens the door for,
Okay.
what people call greenwashing.
Greenwashing. Okay. Explain that one to me.
So basically, it's like companies trying to make themselves look way more sustainable than they actually are.
Ah, okay. So it's like putting lipstick on a pig.
Exactly.
Yeah.
And because these ratings, they often lack that transparency, that accountability,
Yeah.
investors can get fooled, right?
Right.
And all that development cash, it might end up going to projects that look great on paper.
Right. But in reality,
But in reality, they're not so sustainable.
yeah, they're not really walking the walk. It's like judging a book by its cover. You know, you might be drawn in by the flashy design, but the content might not live up to the hype. And speaking of judging systems, what about this market-based finance idea? I have to admit, that one sounds a little jargony to me.
Yeah, it can sound a bit technical,
Yeah.
but essentially it's about, encouraging countries to adopt financial systems that prioritize open markets,
Okay.
deregulation, that free flow of capital.
So instead of each country, like, charting its own course, it's about following the same playbook.
Yeah, you could say that. And
Yeah.
while, the people who support it, they'll say it makes things more efficient,
Right.
attracts more foreign investment. But critics, they're worried that it actually makes developing countries more vulnerable
Okay, I see. Vulnerable to what?
to those global financial shocks, right?
Yeah.
Remember the 2008 crisis?
Oh.
The countries that had those, like, tightly regulated financial systems,
Yeah.
they generally weathered the storm a bit better.
Interesting. So it's almost like the difference between
What's a good analogy?
building your house on solid ground versus like on a foundation of sand, right? One's going to withstand those storms a lot better than the other.
That's a perfect analogy.
Yeah.
And it really highlights why we have to think carefully about these
Yeah.
one-size-fits-all approaches to a financial system.
Right, because what works in one place might not work somewhere else.
Exactly. You can't just shoehorn everything into the same model.
That's such a crucial point to end on, I think. This Wall Street consensus, it's complex, it's powerful, it's shaping the future of development as we speak. And while it might offer some benefits, we can't ignore the risks, right? And we need that healthy dose of skepticism to make sure it's actually working for everyone, not just a select few.
I completely agree, yeah.
And that's a wrap on this deep dive into the Wall Street consensus. Big thanks to Daniela Gabor for her incredible work, and to you out there for joining us on this journey. Remember, there's no one-size-fits-all solution to global challenges. So let's keep asking tough questions, keep those critical thinking caps on, and keep striving for a more just and sustainable world for everyone.